Good morning, everybody. Happy Monday. I'm still in St. Martin. I'm going to be here for a couple of more days, but I got to give you the news updates. Today, I do want to talk about Voyager Digital. There are a couple of updates with the bankruptcy case. Before I go any further, just remember bankruptcy takes a very long time. And although this is not a slam dunk to get out of this, there is still hope. In the comments all the time, I keep getting, hey, Adam, there's only an 11% chance of Chapter 11 bankruptcy companies coming out. I didn't verify these numbers. I just keep getting it in my comments. And I wanted to tell you this. I never said that there's a great chance that we get out of this. All I'm saying is that there is a chance, and that the chance is more than 1%. It's not hopeless. Yes, it's a long shot, but it's not completely hopeless. And even 11% chance of getting out of something like this is not the worst possible odds, right? People win the lottery with a lot worse odds than that. So just keep the faith alive. The second we lose faith is the second that we lose all our money. Whether you're invested in the Voyager token, whether your funds are in the Voyager Digital platform, or you invested in the stock of Voyager Digital. That's all I'm going to say. So a couple of days ago, Sam Bankman-Fried, I believe on Friday, he makes an offer to buy up Voyager's obligations to its clients, to the people that are depositing on their actual platform. To this, he's trying to buy the actual customers. He's trying to buy the customers' information. He's trying to build FTX. He was going to waive all trading fees, and anybody that was able to swap from Voyager to FTX got a free FTX account, and they can either ask for a cash out or they can buy more digital assets, digital tokens on the FTX platform. Essentially, I said this when I heard about it. It's not going to be good for any of the shareholders of Voyager. It's also not going to be good for any of the token holders of Voyager. Maybe it would be good for the actual depositors in Voyager because you would be made partially whole. So nobody knows the exact amount that FTX was going to buy you out for. So if, for example, you were owed $100, you don't know if FTX was going to give you $80 on the 100, or they were going to give you $10 on the 100, or they were going to give you $90 on the 100, or $5 on the 100. Nobody knows. And FTX came back with an answer, and this was their answer. Voyager responds to FTX's offer, calling it a lowball bid. Crypto platform Voyager Digital said a joint offer proposed by FTX and Alameda is a lowball bid that disrupts the bankruptcy process, according to a court filing. And I quote, "The Alameda FTX proposal is nothing more than a liquidation of cryptocurrency on a basis that advantages Alameda FTX," lawyers for Voyager said in a response to a bid in a court filing submitted on Sunday. It's a lowball bid dressed up as a white knight rescue. Voyager will entertain any serious proposals made under the bidding procedures, but the bid from FTX and Alameda was designed to generate publicity for itself rather than value for Voyager's customers, they wrote. It undermines a competitive process, declared no value in Voyager platform and intellectual property, and ignored tax consequences, among other things. And this is the response of Sam Bankman-Fried. Guys, I'm not on one side or another. I'm trying to give you the most fairest, neutral coverage of all news, one way or the other. Sam says in a tweet, "Voyager lost customers' assets, but it still has the majority left. Why haven't those been returned to customers yet? Sad facts from a bankruptcy process. Let's say that Voyager has remaining 75% of the assets. I don't know the exact number. It seems like the first thing that should happen is that customers get back to 75% and then later get the rest of it if anything is recovered from Three Arrows Capital. But that hasn't happened yet. Why? Well, the traditional process is that before customers get their assets back, they get effed. First, there's a long drawn-out process during which funds are frozen. It can take years. Remember Mt. Gox? That process is still going on. To be honest, Mt. Gox is still going on, but people are going to get paid eventually at a much, much, much higher rate than their crypto was worth at that particular time. And since crypto right now is near an all-time low, or like this cycle's low, chances are if this drags out, let's say for 10 years, chances are the people's cryptocurrency is going to be worth significantly more than it is now. It's like a hodl strategy. Now, this is all speculative. I'm not a financial advisor. This is purely entertainment and education. But if you think about Mt. Gox, he's not mentioning that. All right. So that's the interesting thing. The people on Mount Gox are going to get paid pretty lovely at the end of the day. Meanwhile, the entire time, various bankruptcy agents are slowly bleeding the customers' frozen assets dry with consulting fees. This can cost customers hundreds of millions of dollars by the time it's all said and done. And finally, there's an embedded option. So he's right. A lot of the fees, a lot of the cash on hand is going to go to crazy fees right now to lawyers and things like that. But by them denying the offer of FTX, they're opening themselves up for a better offer. They're basically saying, yo, listen, we're not cool with this. We don't appreciate this offer, and we wanted to do a much better offer. We're willing to play ball, but we're not gonna whore ourselves out. Let's put it like that, right? So of course they want what's good for customers, right? Because they have like a public image, but they also want what's good for them. And FTX's offer was not the greatest offer, especially for the actual company. And I don't think it was great for the customers either. But again, I'm just giving you all news. See, if a customer had one Bitcoin on the platform and that Bitcoin was worth $30,000 and then it takes years to go through bankruptcy, what do they get back? One Bitcoin or $30,000? Probably whichever is worth less. So the longer the process drags out, the more optionality customers lose. Well, in the case of Mt. Gox, you could have either got your crypto back or a cash equivalent for the crypto. So I'm not sure. If you're going to get a cash equivalent of what it's worth today, sucks. If you're going to get the actual crypto equivalent of what it's worth today, probably really, really good. They're essentially forcing you to hodl. 6. So what's going on with Voyager? Well, lots of parties were trying to bid 10 cents on the dollar for the assets. If a customer had $100 on the platform, a third party would come in, pay $10 for it, and whatever funds remain, maybe $75, and then the customer gets back the $10. And meanwhile, Voyager's consultants would be slowly draining and the remaining funds. So we submitted an offer. If accepted, any customer who wanted to come to get their share of everything that remained as soon as possible. So the customers above would get their $75 immediately. So they're saying that they would pay out the customers whatever the customers had. Okay, I don't believe that this was mentioned in the first offer, but if they're paying the customers whatever the customers actually have right now, and the customers are willing to take a haircut, maybe that's a good idea. You see, it's funny, if you have your entire life savings in Voyager, let's say $100,000, $1 million, and somebody's gonna say, hey, I'm gonna give you 75 grand, I'm gonna give you 750 grand. Some people will be like, oh, that's really, really good. Some people will be like, no, that's not really, really good. It's a pretty interesting situation. And then there are tax things. So you could take a tax loss. It's going to be very, very interesting to see what's going to happen. Then he says it would let the customers choose if they want to get the remaining assets back right away with no fees or additional haircuts. So he says, so who's against the offer? Well, it was voluntary, so customers wouldn't have to use it. So he's saying that the customers that wanted to use it could use it, and the customers that didn't want to use it don't want to use it. Voyager doesn't want that for the company as a whole, because that's one of their strongest assets, their customers. And if, let's say, even half their customer base or 20% of their customer base leaves, they couldn't entertain a better offer from another company because now they lost their most valuable assets, which is their customers, and they already jumped ship. So it's a very interesting thing. So the people that would have left would put the people that are staying in a worse situation, possibly. Or possibly the people that are leaving put themselves in a really good situation, and the people that are staying, they just don't see the bigger picture. Again, I'm not saying you one way or the other. I'm just giving you guys the news. The consultants, for instance, likely want the bankruptcy process to drag out as long as possible, maximize their fees. Our offer would let people claim assets quickly, or people who wanted to submit a lower bid, taking a large share of customers' assets in the middle. As a disclaimer, I also have a stake in the process, but I'm pretty sure our offer hurts the stake. There's a chance equity in Voyager would be worth more at the cost of customers if the process drags out. But equity holders aren't who matter right now. Customers are. Anyways, in the end, we think Voyager's customers should have the right to quickly claim their remaining assets if they want it, without rent seeking in the middle. P.S. To clarify, our offer would give Voyager customers back 100% of the remaining assets that Voyager has, including claims on anything recovered in the future. All right, that's good. So whatever you have right now left on Voyager would get covered from FTX. That doesn't sound too bad, but again, are you willing to take a haircut of whatever the percent is? And you don't know what the actual percent is. And I quote, please give us some excuse to change more fees on our estate. Parity begins. Anyways, we've made our offer. Hopefully customers are allowed to choose it if they want. If not, guess it's up to the consultants to ensure prompt liquidity. So this is a very interesting situation that we have right in front of us. Sam Bankman-Fried is saying that this is not a predatory offer. Voyager is saying that it is a predatory offer. Sam Bankman-Fried, he made the offer really smart, and he's like, hey, the customers that want it can take it, and the customers that don't want it, they can stay with Voyager. But by doing this, Voyager as a whole, as a company, becomes weaker. It's so interesting what's happening right now, guys. And again, anybody that leaves in general, they're gonna be for sure taking a haircut, right? Anybody that stays is taking the risk that they might get more, but they might get less. For the Voyager stockholders, this would be very bad. For the Voyager token holders, this would probably also be bad, because the Voyager token is associated with the Voyager platform. The less people that are in the Voyager platform, the weaker the token gets. The less people that are in the Voyager platform and they're selling the Voyager customers information to another platform like FTX US, like Alameda, like Sam Bankman-Fried, the weaker the actual Voyager platform gets, which means that people are probably going to make not as good an offer to accumulate the rest of whatever's left with Voyager. I hear Sam Bankman-Fried, and this for sure is going to help him out, for sure, to make FTX that much closer to becoming the premier exchange in the United States. I know it's like battling right now with Coinbase, and a little bit closer to Binance. Who knows what's going to end up happening? Guys, there's also tax implications for Voyager. So when Sam Bankman-Fried is going to take the clients from Voyager over to FTX, there are tax implications, corporate tax implications that they need to consider as well. So it's not just, hey, the customers are leaving and that's it. It's also going to hurt Voyager in some way, shape, or form, but I'm not a tax attorney, so I'll leave that to another video. Guys, thank you so much. Have a great week, and hopefully this week is going to be green for crypto and green for stocks.